A recession isn't a matter of if, it's when. And the smart ones prepare early. In this video, we're breaking down the best financial moves to make before a recession hits, so you protect your money, assets, and future. Like and subscribe now, because financial preparedness starts before the storm. Recessions can be scary. Job losses rise, markets fall, and everyday costs can feel overwhelming. But while most people panic, the financially prepared use recessions as opportunities to protect and grow their wealth. The key is to take smart, strategic action before the downturn hits. You don't need to be rich to recession-proof your life. You just need to make the right money moves now, before things go south. This guide breaks down the most powerful steps you can take today to shield your finances, lower your risks, and set yourself up to not just survive, but thrive during economic downturns. 1. Build a solid emergency fund. An emergency fund is your first line of defense in a recession. If you lose your job or face a medical bill or car repair, having 3 to 6 months' worth of expenses saved can keep you afloat without relying on credit cards or loans. If you already have an emergency fund, now's the time to top it off. If you don't, start with a goal of $500, then build up to $1,000, then keep going. Keep your fund in a high-yield savings account where it's easily accessible but separate from daily spending. Recessions often lead to sudden income loss, and your emergency fund will buy you time and options. 2. Pay down high-interest debt. Carrying high-interest debt, especially credit card balances, is dangerous heading into a recession. As interest rates rise, your debt becomes even more expensive. And if your income takes a hit, making minimum payments becomes even harder. Focus on paying down your most expensive debts first. The avalanche method, targeting the highest interest rates, saves the most money, but the snowball method, starting with the smallest balances, builds momentum. Even $50 extra a month toward debt can save you hundreds in interest over time. Lowering your monthly obligations also gives you more breathing room if cash gets tight. 3. Cut unnecessary expenses. Before you're forced to, it's much easier to cut costs now, on your terms, than to wait until you're in crisis mode. Go through your recent bank statements and look for spending you can trim without sacrificing quality of life. Cancel unused subscriptions. Reduce dining out. Shop around for cheaper insurance. Find small luxuries you won't miss much. The more you reduce recurring expenses, the more you can save and redirect toward essentials or investments. Think of it as practicing frugal habits before you absolutely need them. Recessions reward the disciplined. 4. Diversify your income streams. If you rely on a single source of income, especially a job, you're vulnerable. One layoff or salary cut could derail everything. That's why diversifying your income is one of the best protective moves you can make. Look for freelance opportunities, remote gigs, or side hustles that you can start now while you're still employed. Think online tutoring, consulting, affiliate marketing, e-commerce, content creation, or rideshare driving. Even an extra $200 to $500 a month can be a financial lifeline during a recession, and might even grow into something bigger. 5. Strengthen your resume and network. Recessions often bring layoffs, hiring freezes, and fierce job competition. Preparing now makes you more valuable and more employable if the job market tightens. Update your resume, LinkedIn profile, and portfolio. Collect testimonials, certifications, or licenses relevant to your field. More importantly, reconnect with your network. Reach out to old colleagues, mentors, or clients. Relationships can open doors faster than applications during tough times. Position yourself now so that if you lose your job, you're not starting from zero in your search. 6. Avoid big unnecessary purchases. It's tempting to upgrade your car, move into a bigger house, or finance a new gadget when things are going well. But if a recession is looming, avoid locking yourself into long-term financial obligations you might regret. Postpone large non-essential purchases unless they improve your income or reduce future expenses. Keep your monthly bills as lean and flexible as possible. The less you owe, the easier it is to adapt if your income changes. Remember, cash is power during a recession. Protect your liquidity. 7. Reevaluate your investment strategy. Markets get volatile during recessions, and it's easy to panic. But this is where long-term investors can shine, if they stay calm and stick to a strategy. If you're heavily invested in high-risk stocks, now may be the time to rebalance toward diversified, lower volatility investments like index funds, bonds, or dividend-paying stocks. Don't time the market, but do align your risk with your timeline. Also, keep investing during the downturn if possible. Dollar cost averaging during bear markets can lead to major gains when recovery comes. Down markets are where wealth is quietly built by patient investors. 8. Increase your savings rate. Saving more now gives you a bigger safety net later. Whether you're already saving or barely scraping by, try to increase your savings rate by 5 to 10%. Redirect any extra income, tax refunds, or bonuses straight into savings. Automate transfers to a separate savings or brokerage account. Create a buffer that makes you feel confident no matter what the economy does. When others are forced to cut back, you'll be in a position to save more or invest more, both smart plays during a downturn. 9. Review and strengthen your insurance coverage. Unexpected expenses can devastate your finances, especially during a recession. Now is the time to review your health, life, home, auto, and disability insurance policies. Make sure you have adequate coverage for major emergencies. A large hospital bill or accident can wipe out years of savings if you're underinsured. Compare rates to find better deals, but don't cut corners on protection. Insurance may not feel like an exciting move, but it can save you from financial ruin when the unexpected hits during a fragile economy. 10. Educate yourself financially. Recessions are confusing. News headlines get scary, and panic spreads. But those with financial literacy stay grounded, make better decisions, and even spot opportunities others miss. Start reading personal finance books like The Millionaire Next Door, Your Money or Your Life, or The Psychology of Money. Follow YouTube channels or podcasts that break down economic trends in simple language. Learn about macroeconomics, inflation, interest rates, and how financial systems respond to recessions. The more you know, the less you fear, and the better prepared you'll be to navigate the storm. The next recession could hit anytime, but now, you've got the blueprint. Start making these smart money moves today and stay ahead of the curve. Leave a comment with your favorite strategy and don't forget to subscribe for more financial survival guides and money tips you can trust.